To be here with you all today on this Thursday. Light and sweet. We're going to pick up where we left off yesterday. A lot of time and attention overnight, over the yesterday overnight has gone into money management and building off of what we've been able to deploy over here as far as this type of money management. What could be done to go ahead and position the best we can through our stocks and our Bitcoin and crypto positioning. So I'm going to share that with you. First, right now, we are seeing equity markets under pretty strong pressure today. Obviously, the situation between the United States and Iran continues to escalate. Now, with the call or the threat or the defense. The Iran is saying that the Houthis to close off the Red Sea if the U.S. were to go ahead and take out their power plants and energy infrastructure, as well as, of course, then they would retaliate against the rest of the Gulf states and their infrastructure as well. Things seem to be heating up, and this could even expand the war. If you know. Pray for peace. Obviously, oil still maintaining right around $80 a barrel at the moment. We're seeing the 10-year flirting with what could be a spiral breakdown, just coiling above quickly towards that 5% mark. It's something that could definitely happen. And markets still are maintaining their consolidation of what has been a enormous move up off the April low. And at the same time, you could visualize what's happening. I did a video and I was like, watch for there to be a rotation from the semis into Bitcoin. And that surely didn't happen at all. What did happen though, and you could see it closing in today, and if you look to the right where you see the hyperscalers, you see Google and Amazon, even with the Nasdaq off a percent and a quarter, you're seeing them still maintaining relative strength, and you're seeing the orange line over here, the Mag 7, right? You have seen a sharp rotation coming from the semiconductors from memory into the Mag 7. And, how do you view that? Is that a bit of a healthy rotation as the markets consolidate? That would be the bullish lens, and it's probably what is happening. But again, and unfortunately, we have to bring this all back to the current events that are taking place. And yes, throughout all of this episode, the price of crude is obviously, maintained. That could quickly at any point in time spiral. You have to buy time, obviously, and eventually the strait will be bypassed through pipelines. But I would imagine that takes a significant amount of time. And then for me, the worry would be, well, they'll just bomb the ports, where the pipeline goes to, and it's a mess, it's a disaster. And let's see what else is going on over here. Let's start with our couple of things going on though. Just checking in on gold right now, and gold has, wow. By the way, just looking back on the breakout, calling the super cycle in gold, we were like, it's not going to stop at 2,500. I'll see you at 5,000. We'll reevaluate, right? It's going, I mean, very bullish. So there was a video that was passed to me yesterday by Vakanet called from Andre Jackson, on the financial musician guy, and it was well explained. He was basically taking Luke Roman's thesis in his most recent newsletter and then just explaining it in an easily accessible way that anyone could understand. But one of the things that I was not aware of, one of the things that was really interesting, he was talking about Treasury Secretary Bessent had recently posted an op-ed in the Wall Street Journal, and he was talking about, in a sense, returning to Hamilton economics. Now, basically the need for a neutral reserve asset. Gold is talked about. I'm wondering why Bitcoin is not even mentioned in this context. Look, I recommend watching the video. I fell asleep the last 10 minutes. I don't even know how it ended, but I do recommend just watching that video. And the time anyway, but from our perspective, I said I'll reevaluate at 5,000. Let's reevaluate what has happened. One of the interesting slides in that video, though, it talks about how all of these central banks have been purchasing gold, and it points to the largest purchaser in 2026 being Poland. Uh, by the way, Tether was probably the largest purchaser of gold in 2025, and it was not included on that chart. I think that's relevant. But, well, you saw Poland, and then you saw a few other countries. And then at the bottom, though, were net sellers. And the second largest net seller, it's almost as much as Poland bought, was Russia. So that caught my eye because Russia was the first one to divest of US treasuries and begin stacking gold. China then following. And now we know today that more countries are holding onto gold than US treasuries. And there is the wild theory, the conspiracy theory that eventually you're going to see Russia return to US treasuries and trading with the United States. I know that's absolutely crazy, but I've brought that up before. And the reason I bring it up again is because why was maybe they had to pay for the war that's undergoing. I don't know, but notable. And it was about even anyway. If you take out the sellers and the buyers, it was about even. And I wonder why Bitcoin wasn't mentioned. We see obviously that the Clarity Act is being pushed with as much force as possible to get it over the line right now. And then we talked about, well, we don't truly understand the ramifications if it is passed, but between the Genius Act, the Clarity Act, it does seem that the US is trying to set up a future where stablecoins play an enormous role in the financial system in order to go ahead and to be able to accommodate the massive amount of debt spending that continues. Someone's got to pay for it. Foreigners are no longer. If that's happening, how does gold play a role in that? And I would think Bitcoin does. The higher the price of Bitcoin, the more entrenched stablecoins become. I don't know, thinking out loud here, but nevertheless, we always talked about obviously Bitcoin, Select Tech, and gold here is now off 30%. How much more could it come off? Is it worth even trying to time? Is this a good time to dig in? I'm looking for like a mean. I'm just gonna go ahead. It's maybe that's high up on the chart. Seems like a good place. I guess if I pick the middle of the channel, it's still pretty good place. It seems like gold has been in this massive accumulation point, much like Bitcoin, most likely is now, and then came to the mean, overshot, and then now has come back to the mean. It seems like a really good time. I'm moving it off the bottom now, only because that's the top over there. And yes, I mean, is it worth picking a couple hundred? If you're trading futures, of course, it's a big deal. But it seems like a fantastic spot to be beginning to accumulate. Silver, same exact thing, right? The relationship between gold and silver, and that's it. I don't know why I got off on that tangent, but I'm there. And I think Bitcoin should be an important part of the conversation, especially since, like this was off of Luke's work. Luke was obviously had become late an enormous proponent of Bitcoin. Uh, you know, Same thing with Andre, late, but became an enormous proponent of Bitcoin. And you would think that it would at least be like in the conversation. Now, it seems to me that one side, the Chinese, they absolutely would love it for it to be gold. They're building vaults with all trading partners in regions throughout the world. They are, if you check out the prior video that Andre did about a few weeks earlier, he talks about how they were preventing domestically in China paper market trading anymore. And it looks like that they're trying to, let's say, bring in the true value of how gold should be priced, the bricks, right? Gold backed currency. And then the US could say, well, we have the most gold in the world. No one could see it, but you have to trust us. We do. We have the most gold in the world. And so, I mean, but at the same time, the Chinese also have a pretty large Bitcoin stack as well. Looks like they're both hedged, and likely you should be as well, right? Instead of all your chickens in one basket. Why are we counting the chickens before they're hatched? All right, so that's the gold rant. We're glad to bring it in. Jumping back over and taking a look at where we are, obviously on our positioning. Seems like a good place to be where all of our stocks are completely out on the sidelines after the move, catching some nice wave between April and into May and finally ultimately into June. And right now, we're seeing, you know, a little bit of action here on the buy side. We're seeing Bitcoin here now at the mercy of the overall market, still holding up relative strength. But again, it just held sideways ever since the semis started coming off. Bitcoin's at the same price. It's at the same price. Some people are saying that looks like the 2018 bear market right before it crashed. Let's check out one other thing then. This does look like a second attempt for Bitcoin breaking out versus gold. It came back. It's retested over there. That resistance now confirmed support or on a second breakout. That's pretty good for. This was probably the biggest failure of trying to hypothesize what the projected path of Bitcoin was going to be coming out of this S curve, and a tremendous and major deviation has definitely taken place. I'm sorry, I'm trying to bring up, here's, I guess we could use this for the bear market if I take that off. I don't know. Price here, do you remember like for months it was just like paint drying? Yeah, I don't see it. I see more of actually a potential fractal taking place that we looked at earlier. I digress. Bitcoin here, currently inside the wedge, and ultimately the breakouts from these wedges tend to be extremely bullish events. Question remains whether or not it's going to be able to, or whether or not I hope the unforeseen doesn't happen. Like, seems like a significant amount of people are adamant on the window that Bitcoin has to bottom. And depending on what's going on with the macro, find out. Again, this just enforces knowing when to be in the market, when out, and on the right side. You're seeing this absolutely occurring right here on stocks. And even though right now, not really getting any loft, we see that we are positioned on the right side here across Bitcoin and crypto. And Don's buy side boost here once a day, continuing to move. So that's our check-in for today. And then let's talk about what we're working on in building from the conversation yesterday. Yesterday, I wound up taking, we'll start here. Yesterday, the first thing I did was I built like a research engine. And I went ahead and I took some highly coveted papers on machine learning and algorithms. Then the next layer I did was, okay, now I need to do the same, but for finance related. And then the thing after that I went ahead and, as Roman suggested, I went into how they, for genomes, they use what they call evolutionary parental selection. So you have an enormous amount of data, and what you do is use like natural selection. Like you have like the top tier go on to reproduce. And well, the thing about that is that what that's going to do is that's ultimately going to produce the most curve fitted to data product available. And which sounds bad, and likely is bad, but we don't know, so we're gonna just run the tests anyway and find out, because maybe there's a way to bring into that type of selection some type of consistency or something. Then the next step yesterday was going ahead and off of, after talking about Thorpe, and the session that we did yesterday, I went ahead and I collected a library of highly coveted material on money management within finance. And then I've begun running it, and this is all brainstormed off of the money management that we're deploying here off of the sector basket. By the way, one of the things that I'm doing over here, yesterday when these went to trailing, for example, ETR, JNJ, there was another one, but okay, CRDO. I put them as blue, so that I will go ahead and hit the trailing into them. All three of these since I've exited the market. I find that's an easy way for me to keep tracking. But I was saying, well, wow, this money management we're deploying here on the universal V5 plus settings seem pretty great. Let's go ahead and see whether or not we could find a way to implement a better money management into our stocks and Bitcoin and crypto. And so take this all with a grain of salt, right? So this was saying for stocks, like an annual return of 57% and a drawdown of 11%. The volatility is being measured in order to do the position sizing over here. Let's continue. So the reason that Amazon, by the way, has such a large weighting is because it's very calm. It's volatility compared to something like my strategy or Solana, which is excessive. Like Bitcoin is very calm, so they get larger position size than the wild ones, to help bring in that consistency. See, that's what I just explained to you over here, though. It says, for every template, it measures the basics, how often it wins, the average size of a win, and how wild it swings. Amazon is calm with a 22% swing, and Solana is manic, 134% swing. Wild isn't bad. It just means a little of it goes a long way. This is the pipeline that it's going through. It's sizing up the rate, the average gain, how wild it swings, how they move together, correlation on days both are trading, and then splitting along, capping at 25% as Amazon is capped. It says, the math says for the back test that you could go 17x long, but that's, we can't, we don't go on any leverage, 1x, no borrowing. And this is also to be viewed in two ways. We'll come back and look at this one next, because this is month over month. For example, here you could just spot the outlier. Google in 2026 is saying that it has an 111% gain. That's not true. The reason it's saying that is for a trade that took place over here beginning in June of 2025, closing in February. So it's booking that gain. So I was like, well, that's interesting to look at, but what's it like month over month? And the difference, you can see the difference is actually not too much different. So forget 2026, month over month, it would have been a 43% on stocks compared to 53, 57, 80, a little bit different. when looking at it that way, month over month, or the exit year the trade actually happens. Same thing on crypto. So I took into the stocks, the Amazon, and not, by the way, not yet the improvements that Brownie Brown has made. For example, this is looking at Amazon from 2019 to present, and it has 175. You can see Brownie Brown's improvement on all of this. One of the main things here, this was built by the attempt at the engine, and as a 20% stop loss. Stop loss here is about 10-11%. Ultimately, and same thing here, Tesla O2 is put into here, Google's put into here. What is missing though is that ultimately, likely in the next near future, uh, that this is going to change, and maybe there'll be more additions, or or tightening up, or whatever. So this is like figuring out multiple things at once. One of the most important ingredients here is money management. Then of course it's uh like template selection, as ticker selection. One of the things I've not yet done, and is next, because you saw it over here, what I did with, which is probably one of the biggest breakthroughs, is putting in the uh, the regimes over here, and this was able to create a universal template that needs to be bought into the development that we're taking place over on V5. Same thing as V5 Plus, as well as volatility. I think is something that really needs to be hit on. By the way, has anyone set up an Obsidian Vault? I haven't yet. I don't think I have the time to really make it as I would like, but I'm going to go through the first steps of setting one up. So that's just in place, but I don't I have a lot going on here that my focus is taking place on. So this is done with both Bitcoin and crypto, as well as with stocks. It's not over here. I don't have it on the list, but the position sizing is important. I think we might have saw it over here. Yeah. So you're seeing the weighting over here, and Bitcoin, for example, getting 37%, Solana only 12%. I was wondering if the buy side boost that we implement is the best form of money management. And maybe it is. And this is done right here with the buy and sell sides and the stocks here initially. One of the steps that is going to be taken is to take the buy side boost and say, here's how the buy side boost works. Is that the correct thing to be doing, the most efficient thing to be doing? Or should there be some other different type of weighting that's taking place at the same time? All of that is, in the buzz. I don't know what to call it. Buzzing around in the hive mind here right now. So that's it. I mean, that's not that's it. Not too much. That's what's going on. And I'm gonna keep going. Oh, volatility is one thing that I think that, and this was kind of coming into the forefront, aside from the money management. But the money management and the volatility of how each asset is then used for the weighting, I think that if you look at something like strategy, it performs extraordinarily well. And it's a high vol asset. And you can look at Amazon though, and you say, well, Amazon is calm and consistent, and it's not a high vol asset. So that's me kind of, talking against myself, trying to figure out what's. I don't know what's right, and ultimately the data, we're data driven, is gonna find out. But all these options need to be considered, and everyone needs to be really given a full opportunity to find out whether or not it's right or wrong. Volatility is one of them that needs to be considered. And then one other important one here is, as I'm continue to talk out loud, which is very important for these planning sessions. First of all, it's like a whiteboard session where you know what's going on. I'm firming up the next direction of what's being built. And One of the things is that a lot of the tests have been done recently with a blind, like 2023 to present is just forward tested on blind data to see how it performs. Now, you take something like strategy, and strategy has been now forward tested for how long would you guys say? I would say close. I would say a year. I don't know exactly, but I would say a year. And if you look at the test I mean, it continues to perform exceptionally well. And there's the thought, uh, the academic. I'm trying to think of the correct word here. The correct academic approach is that there needs to be blinds in the test. However, this was a blind, and I mean, this is all forward test, and I would say, well, I'm not so sure about that. Maybe having the most data to work off of is what's best. So ultimately, the way I'm approaching that is twofold. I'm going to have uh, two sets. One is going to be developed with a blind. The other is not. And then the forward test on those quarterly are going to determine ultimately what is the best approach. All right. So massively important session here. I'm gonna get back to work. Um, let's check in last. Markets continue here. Definitely in the red. Again, there is rotation happening under the hood, and it's too soon to make any type of decisive call. We're about to enter what is the most volatile period of the year. Let's call it from next week into the end of September. Normally the VIX raises substantially. I hope you're appreciating it. I know I appreciate all of you so much. Now we also have a weird catalyst coming up, and that's earnings. And we have two major drivers coming into the end of this month. We have obviously, well, three. We have the conflict, which is obviously of crucial importance. But we have over here on the 29th, we have FOMC, which is a major catalyst. Yes, we do have the Iran conflict. It is a major driver right now. And then we have into the end of the end of the month, we have earnings. Google, Tesla reporting, Texas Instruments reporting next week, starting on Wednesday. Following Wednesday after that and Thursday is Amazon, Apple, Meta, and Microsoft, the Mag 7, coming to market with their earnings is going to be really important. So that's what we're set up for. Everyone, that's another good way to. So this is interesting. In so much as that the reason it's be given less weight is because of the fact that it's so wild, and a more reasonable way is because it doesn't enter as often as the other templates. So that's a very interesting approach as well. I've already done the research on, for example, and you could do it too. All you need to do is go into the list of trades and to save the list of trades, CSV files, place them all into an LLM, and like tell them like what the rules are for buy side boost, and it definitely, the drawdown is going to be obviously a little bigger, and the returns wind up being excessively much larger. But I wonder if having the correct weighting and then some type of buy side boost also. I like that this is using not only this using the consistency, it's using when they move together, the correlation, and the weighting is derived also on how correlated the templates are. There's a lot being uncovered over here, and there's a lot more to go out. So, Craig, I love your post and your share inside the V5 Plus yesterday. Everyone, everyone, lots of love. God bless you. Have a beautiful day. Tomorrow I'm on the edge, whether or not it's Friday, summer. We may take it off. I'll update y'all in the Discord. Either way, I'm not. I got a couple of more days here where I am just full throttle. So I'm going to get to it. Beautiful day, everyone. God bless you.